Welcome, my name is Vincent Luce with Forex Trading Institute. Please take a couple minutes and go over the following risk disclosure. Lesson 13, the reversal or King's Crown. To be tested is good, to be challenged is even better. We only learn from the issues in life that disagree with us, not agree with us. And in this lesson, we're going to cover the King's Crown or the reversal. We're going to learn how to find when the market's going to reverse and go the other way on us. Now, when the market is trending, okay, and we're seeing here that the market's doing A, B, C, D, we're in an uptrend, we start looking for a reversal once we have a trend line break. And we're going to learn that there are the 5 steps to determining a reversal. And this is very important. I really believe that if you learn the ABCDs and the 1, 2, 3, 4, 5s, you're on your way to becoming a very successful trader. Now, when there's a trend line, when we have here an uptrend and there's a trend line break, it now turns to a 50-50 chance of a reversal. And it's 50-50 because there are still some Fibonacci numbers below the trend line that may hold as support and keep this trend bullish. So we just start thinking of a potential reversal when there's a trend line break. Now, step number 2, the market returns and tests the previous level of support or takes it out and makes a lower low. Now the odds change to an 80% chance of a trend reversal and a 20% chance of a continued uptrend. Okay, so once we had the trend line break and then we made a lower low and hit that support, now we have an 80%. And you also want to look at this angle, because if the market comes back and hits this trend line, and if this trend line is lower than this A, okay, we have an 80% chance of a continued, of a reversal in this market. Now, step number 3, we find the B of the ABCD that will be the left tip of the crown. The height of the left tip will give you indication of where the right tip may go. So once we hit the B, the third step is to find the left tip and draw a line across, because it might give us the indication that in this area is where it's going to be the right tip, and there's where the market's going to fall. Now, step number 4, we enter the market at the back side of that trend line or at a corresponding Fibonacci number, which may become now a C. So we draw our new A, B, and we wait for the C. And the C could be at the back side of this trend line, coordinate converging with this left tip, and with a Fibonacci number. We look at where there is a convergence and we want to enter at that convergence. Okay, now using the Fibonacci tool, we draw your Fibonacci lines from the new A, we pull the Fibonacci from the new B, and we project the entry point, and we also project our exit point using the 4 levels of support, converging with the Fibonacci numbers. Now, step number 5, we draw a new downward trend line across A to C. And the market should continue to fall below that trend line, making a new A, B, C, D. Okay, and we could see it here, and look, this is why it looks like a crown. We have the left tip, center tip, and right tip. And you can see it here. We have the left tip, center tip. Look how we were making ABCDs above. Here was our trend line. We had a trend line break. That was step number 1. The market hit support. Step number 2, the market went to the right tip. We look for our left tip, sorry. Step number 3, we draw our new A, B, and look how we had a 618 converging with the left tip. So we would sell at the 618, which is the favorite number of Fibonacci, and then we had the big down movement, and we draw our trend line, step number 5. We have a new downtrend. The trend has reversed from an uptrend to a downtrend. And the complete King's Crown, it's going to look this way when there's a whole reversal. Market making ABCD. We had a trend line break, step number 1. Hit support or took out support, number 2. We look at the left tip, number 3. Then we look at our right tip projection. And then step number 4, we make our A-B, pull our Fibonacci, start projecting where this C is going to go. And we try to sell closest to that trend line. And then we rally all the way down. Okay, and this is the 5-step break. We can see it again. Break of trend line, full candle break. The market bounced at support. Pulled back. Look how it pulled back to that trend line. We would have sold at the backside of the trend line, or we could have sold at a Fibonacci number here. The market gave us 2 shots. Plus, this was the left tip, and then we did our new A-B to project our extension. Look how we had a support coordinating with the Fibonacci number. And we always want to exit 10 pips above, like in this situation, since we're shorting from that projected. So the market hits, remember, bulls score a point and then they pull back. Now, the value of learning the crown formation, with the completion of the 5-step process, the center tip of the crown should be the high of the new downtrend. And the crown formation entry teaches you how to get in a C, or the first wave of a new downtrend. And becoming a good chart reader requires spatial intelligence. When a mark makes an upside down crown or inverted crown, we could recognize this would be a bullish crown when it's telling us it's going in an uptrend. And all the steps are the same, just upside down. And you're going to learn that we've modified this. Most traders call this the head and shoulders. And they teach you how to get in at the break of the shoulders. But you're going to see that this technique gets you in a lot earlier. And in that first wave, you're going to be able to take profit instead of waiting for that first wave to occur, wait for the break of the shoulders, and then the future waves you're going to make with a lot better equity management. Now, let's look at it when there's a downtrend, and you can see the market's making an A, B, C, D, and the market breaks this trend, the trend line. That's the first potential, just like the downtrend. Just like in the uptrend, when the trend line break, there's now a 50-50 chance of a potential reversal. But there's still some Fibonacci numbers that may hold and keep this trend bearish. Now, when the market goes and takes out all those Fibonacci numbers and hits that resistance, now there's an 80% chance of a change in direction and a 20% chance only of a continued downtrend. So when we look at this and it hits this, okay, and then it pulls back or took out that thing or made a higher high, now we got to start thinking of a potential reversal. So we look at the left tip, okay, it's going to give us an indication where the right tip may go. So we want to draw a line across to give us an indication and find where it converges with the Fibonacci number and the trend line. Okay, and then we want to make our A, B, pull our Fibonacci tool to find where's that convergence with the left tip. That would be step number 4. Now, step number 5 is once it does its new A, B, C, D, and we exit for profit, we draw our new upward trend line because the trend has changed from a downtrend now to an uptrend. And you can see this is the way the trend is going to look like. This is the way the bearish crown is going to look like. Okay, this is a reversal of a crown, that reversal going up. Okay, and you can see left tip, center tip, right tip is just a crown upside down. And this is the complete King's crown, and the reversal is in place. This is the 5-step process. Okay, so you want to look at this, the market, you can see we had a break, that's step number 1. It hit the resistance, step number 2. Then we look at the left tip, step number 3. Then we're going to go and look for the right tip for step number 4. And we could see that we had the new A, B. The market pulled back to C, and it did its new extension. That's step number 5. So step number 4, we did the A, B. Look how here was the back of the trend line was converging at a Fibonacci number. even though that left tip was a little lower, we want to get in where it converges. There's a convergence at the back. Convergence, remember, means two or more factors. We had the backside of the trend line and we had a 618 number. Everything was telling us we want to buy here. We put our stop below A, and look at this nice profit. Would have exited at the 618 in this example, 10 pips below that 618, and we would have taken our profit. Okay, so you want to remember, it requires spatial intelligence. It's the same thing, the downtrend. Sometimes this uptrend crown is a lot easier than finding a downtrend crown. Remember, you want to review this lesson until you understand these reversals, because the market's doing ABCDs, doing consolidation, and then it reverses. And if you know all these steps, you got all the tools to recognize in which condition the market's in. Okay, and you can see, you cut the king crown in half to envision an A, B, C, D. Look how the market did A, B, C, D. If I cut it in half, then I have the new A, B, C, D. Just like here, I have an A, B, C, D. If I cut it in half, then I go A, B, C, D. And you can see it here. You attach the A, B, C, Ds to the up and down swings and their extensions. It does an A, B, C, D. And then we do an A, B, C, D downtrend. Same thing here, A, B, C, D. There was a trend line break. We start looking for a new A, B, C, D up move. Remember that Fibonacci numbers are hidden levels of support. That's why we want to enter at one of these numbers. And remember, the market bounces at 382, 50% or 618. The market's going to 1618. That would be the resistance level. If the market bounces at 786, then the resistance level is the 127 number. Same thing for a downtrend. See, if the market hits 382, 50, or 618, it's going to the 1618. If the market bounces and hits resistance at 786, then we're going to that 127 number. Okay, remember there's two entries in trading the crown. We enter C at a Fibonacci number, okay, or the back of the trend line where it converges with the stop of A. Okay, so we put it, for example, here, the backside of the trend line. We want to see where it converges with a fib number and put our stop above A. Or we could enter at the low of, in this case, at the low of B, which is the left tip, where it converges with the right tip. So there's two entry points, and usually that'll bounce off the 382 number. And you could see it here. For example, the market did the trend line break one, and then this is the backside of the trend line with a 618. So we would enter at that 618 and exit 10 pips above that 1618. We did have a convergence here. If you want to play it longer or play a couple lots to the 2618. Okay, but I would have taken my profit 10 pips above. There's about 100 pip profit here. And an upward trend line. Look how we had here the market. This is the other entry point. Look how that did A, B. Okay, if it pulls back, we got a 618 converging with the backside of the trend line. Now, rules to trading a crown: you want to find and draw all the trend lines, the inner, outer, and long term. This will help you determine if you're in an uptrend or a downtrend, or if a trend line has been broken, signifying the potential end of a trend. You want to find the break, the trend line break. Remember, there's an inner trend line break is broken. It may go out to the outer trend line. You also want to follow the crown in the 5 steps and making your 1, 2, 3, 4, 5. If steps 1 or 2 are achieved, you got to start setting up your trade, because any crown 1 through 5 may form. Now, there are only 2 entries. Okay, there's that 618, 786 backside of the trend line, or the entry at the left tip, which is also known as the B, the prior B. Only after a 382 bounce. And you always want to pull out your trader's checklist and trade that plan. If you can't afford that potential loss, you should stay out of the trade should the trade not work out. Okay, so very important. Remember, if the equity management does not follow, you pass on that trade. Okay, so this was the King's Crown, lesson number 13. I recommend that you review it several times. My name is Vincent Luce with Forex Trading Institute, and I'll see you at the next lesson.